Hey, everybody. Dan Fitzpatrick here, Friday the 21st. Just a reminder that next week we've got the Fed meeting. Wednesday, we should hear what the oracles of finance are going to do this time around. My suspicion is it's 25 bips. And then news at 11. They've said they're not done. They're going to do more than 25. But let's just get through each 25 basis point hike at a time, and then we'll see what the market does. And then we've also got Microsoft earnings on the 25th, as well as Google's or Alphabet. So here's what I want to do. I want to look at these real quick, and this is why. When we were waiting for Netflix earnings, get to the daily chart. At Option Market Mentor, I put on an iron condor in anticipation of a volatility event. And the idea was to sell at that time the $530 call and the $430 put that expire on Friday today. And so I sold those, and the idea was that the implied volatility is so high that, and why? Well, it's because of earnings. And so the options are really expensive. So I went far out of the money and looked at the option pricing to see where the probable maximum move on the stock would be. And then I sold calls and puts just outside of that anticipated range. And so, and then I hedged it with a higher strike call and a lower strike put, but I was essentially short options at $530 and $430. And so how'd that play out? Well, it played out really well. And you'll notice that the stock is closed here 423.79. So, oh crap, it's over $6 below the strike where I sold. I must have lost my butt. Well, no, because we got out of that trade yesterday. As soon as the stock opened up down here, this trade here, the $530 call, that went to zip really fast. So that's done. But then, so we're down here a little bit, still well above the strike, and those puts that we sold, the 430 puts were less than what we sold them for. So we were still able to buy them back for a profit. I was concerned that it was going to fall, that Netflix was ultimately going to fall below 430. And so I really didn't want to stick around and see. I didn't want to get greedy and say, well, maybe it'll close above 430. So we went ahead and bought those puts back, and it's a good thing we did. And so we're out of that trade now. Made a boatload of money on that. Now, next week, I don't know what that is. It's a typo. Next week, we may be able to do something similar with Microsoft or Google. Right now, they're really kind of settled down, and they're not really giving us much to look at. But the play that I just described is the type of trade that you want to be doing on around earnings. You don't want to be betting. You don't want to be betting about which way the stock's going to go. You want to be betting about how far it's going to go. And the options market can tell you what the probable move is going to be. And the options market is pretty darn smart, okay? Because that's the wisdom of the crowd, not the madness of the crowd. That's the wisdom of the crowd. So anyway, hope this helps. Hope this was informative. And I hope you have an awesome weekend. See ya.